Hello everyone, this is Bhavik Chokshi here, and in today's video we would be discussing a specific concept which is a pain point among students in their CA final SFM, which pertains to dividend equalization. So this is within the section of mutual funds, and there is one particular section of dividend equalization. So we want to understand what is exactly meant by dividend equalization and why is it needed in the first place. So over here, dividend equalization is relevant for mutual fund units, especially open-ended units, because it might happen that units may be issued, may be redeemed throughout the year, whereas dividend is distributed at a particular date. And unlike companies where share issues happen just barely once a year or so, and that too not often, mutual fund issues as well as redemptions happen frequently. So in order to facilitate a fair distribution of dividend based on the income earned to the unit holders, certain cases we do have the concept of dividend equalization. Now, what is dividend equalization and why is it relevant? So for simplicity, let us say there is a mutual fund which has, let us say, 1800 units which are in existence, and then this is on 1st of April 22, and then on 30th of September 22, let us say another 200 units are, let us say, issued. You can also redeem them, but let us say they are issued. So over here, apart from that, mutual fund had a starting NAV of 10 rupees, and the profit after tax, let us say, for the first 6 months, that is 1st April to 30th September, is let us say 3600, and let us say the profit in the last 6 months, let us say from 1st October to 31st March is, let us say, 2000, in which case your total profit for the entire year seems to be 5600. Now hypothetically, if at the entire, if I go to see on 31st March 2023, I am sitting with 2000 units, and if hypothetically the entire 5600 is distributed out as dividend, this will go pro rata, pari passu as you say, to all the unit holders. So this is 5600 upon 2000, this is equal to 2.8. So this is, let us say, rupees 2.8. This is what you call as the dividend per unit. Now, is this fair dividend? The old unit holders will say that ideally we were holding the units in the first 6 months when 3600 was earned, when we were the exclusive unit holders. So ideally this 3600 should be belonging to us. Later, another 2000 was earned when there are 200 new unit holders as well, which means this 2000 is attributable to all the 2000 unit holders. And as a result, we would say that 2 plus 1, which means 3, should be the fair dividend that the old unit holders should get. However, they are getting only 2.8. On the other hand, there is new unit holders who should actually get nothing out of the first 3600. However, out of the remaining, they should get 2000 divided by 2000, that is, they should be getting 1 rupee, but they are actually getting 2.8. And hence there is not a fair distribution, and hence people might actually be incentivized to buy or sell units prior to the dividend date in order to use this. And hence what happens is a mutual fund typically will charge what is called as dividend equalization. So over here, at the time of new units being dividend equalization, at the time of new units being issued, we will ask from the new unit holder, let us say the NAV at the time of new units being issued is also 10 rupees for simplicity. We will say 3600 is the income earned for the period when you are not the unit holder, which is attributable to 1800 units, and hence 2 per unit is called as a dividend equalization levy, which is the income earned till the date divided by the number of existing units. So that is 2 per unit, and hence from the new unit holder will have to pay the NAV, which is, let us say, 10 rupees plus entry load if any, and entry load is a percentage of the opening NAV. So let us say, for example, entry load over here is nil. Entry load is a percentage that you have to pay as cost as a new investor in order to enter, plus let us say dividend equalization. Dividend equalization, for example, is, let us say, 2 per unit, and hence the new unit holder will pay 12. Now when he is entering, ideally he should have paid 10, however he has to pay the additional 2 for the purpose of dividend equalization. Now how does this result in a fair distribution? What will happen is the amount received in the form of dividend equalization is 2 rupees per unit into 200 such units, and as a result 400 is additionally received, and this 400 is to be available for distribution. So this is a part of distributable profit, and hence this is a part of income available for distribution. So therefore at the end of the year, your income available for distribution, will be 3,600 plus 2,000 plus another 400. So 5,600 of profits earned plus another 400, and hence 6,000, and this 6,000 will be distributed among the 2,000 unit holders, that is 3 per unit. Now how does this ensure a fair distribution? For the old unit holders, as we have said, they should have received 3 rupees. Well, they are receiving 3 rupees, and for the new unit holders, they should ideally be receiving only 1, but they are receiving 3. But out of this 3, 2 rupees they themselves have paid earlier. Ideally they should have paid 10, they are paying 12, and hence they themselves have paid the 2, they are recovering the 2, and hence the net dividend for them is 1. So this is the feature of a dividend equalization. In case of new units purchased, a similar assessment will also be done at the time of units redeemed. So for example, at the end of 6 months, if 200 units are hypothetically getting redeemed, they will not be entitled to dividend on this 3,600 when it is distributed at the end of the year. So what will happen is, ideally I should give you 10 rupees at the time of redemption. However, if redemption is happening on 30th September, not a new issue, then 3,600 divided by existing units, that is 1,800, and hence 2 rupees will be paid out as dividend equalization levy, and hence 10 rupees plus 2, that is 12 rupees will be paid out to the unit holder. So hypothetically, if I were to say NAV of 10 minus exit load, if any exit load is to be subtracted, let us say there is no exit load, and plus dividend equalization. So the dividend equalization levy over here is, let us say 2, and as a result 12 rupees will be paid. Now that means 200 into 2, for example, that is 400 is paid. So your income available for distribution will be 3,600, let us say, plus let us say 2,000 is earned. You might even earn less because here you have lesser units, lesser capital, so maybe it is less, but let us say for simplicity it is the same, minus 400. And hence 3,600 plus 2,000 minus 400, which will come to 5,200 is the income available for distribution. Sir, 5,600 is earned, but 400 out of that is already distributed, and hence this 5,200 is now to be spread between 1,600 units. 1,600 units. Sir, how did we get 1,600? 1,800 minus 200, and hence 5,200 divided by 1,600 will come to, let us say, 3.25. Now how is it fair? For the existing units, 3,600 plus 1,800 plus 2,000 by 1,600, and hence 2 rupees plus, if you do 2,000 divided by 1,600, there is 1.25, and that is exactly the 3.25 that the existing 1,600 unit holders are getting. Apart from that, the 200 unit holders which are claiming redemption should have got 3,600 by 1,800, that is 2. They have got that in the form of dividend equalization. So what do we need to remember? When do we apply dividend equalization? If and only if the question tells you that. If it tells you that, then you will calculate dividend equalization as the income earned from the date of last dividend distribution till the current period. So from the beginning of the year, let us say till 30th September, and whenever there is a new issue or there is a redemption, the dividend equalization amount will be charged from the new investor or paid to the redeeming unit holders. In all of these cases, we have assumed that there is no load, but if there is load, remember, load is a percentage of the NAV. On dividend equalization, you do not apply the load. Entry load is to be added, exit load is to be subtracted. Keeping that into consideration, we will refer to the concept. So I've shared a bit of theory over here. So what is dividend equalization? It is to be added to NAV at the time of issue as well as at the time of redemption, if it is specified. This is done in order to ensure a fair distribution to continuing, new or redeeming units. The dividend equalization per unit is the income earned during the period divided by the existing units during that corresponding period. The dividend equalization is to be calculated only if it is specifically required in the question. Otherwise, you don't do that. And as per ICAI, the following treatment should be done for dividend equalization. First, it should be added to the opening NAV irrespective of whether it is issue or redemption. Second, entry or exit load is levied on the opening NAV unless otherwise given, excluding dividend equalization. And income available for distribution equals to the profit for the period. In our example, 5,600 plus or minus dividend equalization. If it is received, you will add. If it is paid, you will subtract. Considering that there is one sum in the institute's material, so we'll quickly try to discuss that so that you get perspective. It's a fairly complex question, but hopefully you should get understanding. So over here it is same as the institute material, so if you have that you can just directly go to the discussion of the solution. I'll just glance it for the benefit of everyone. On 1st April, an open-ended scheme with a mutual fund has 300 lakh units outstanding with net assets value of 18.75. okay, so that is your opening NAV. At the end of April, it issued another 6 lakh units, so you add, becomes 300 plus 6, that is 306. At the opening NAV, the question clearly tells you it is at the opening NAV plus 2% load, adjusted for dividend equalization. Adjusted, it does not tell you add or less. Well, you will add whatever is the dividend equalization. At the end of May, 3 lakh units were repurchased at the opening NAV again, less 2% exit load, adjusted for dividend equalization. Again, dividend equalization has to be added. At the end of June, 70% of the available income was distributed. So you'll have to first find the income available for distribution. In respect of the April to June quarter, the following additional information is available. So you have the appreciation, then income of April, income of May, and income of June. You are required to calculate the income available for distribution, the issue price at the end of April, the repurchase price at the end of May, and the NAV as on 30th June. So what we'll do over here is we'll first try to find the issue price at the end of April and repurchase price at the end of May. So if I were to discuss this, you will start in either case at the opening NAV. The opening NAV is 18.75. So if I want to find the units of April, I will say that to this new units are issued and hence there will be entry load. The entry load is 2% of 18.75. 18.75 into 2% should come to the value. Okay, so that's 18.75 into 2% comes to, let's say, 0.375. This is to be added and then plus dividend equalization. Now, how will I find the dividend equalization amount? Well, you will take the income earned from the opening till April. Now, from the opening till April, the income earned is 22.95, and this belongs to the 300 unit holders which were in existence in April. So this is 22.95 upon 300, and as a result, this comes to, let us say, 0.0765, 0.0765, and as a result, your total issue price in April, will be, if I total all of these, it should come to, I think, 19.2015 or 19.2. If I just verify that, that's 19.2015. That's perfect. Now, at the same time, how much money is coming in? Well, there are 6 lakh unit holders, and hence 19.2015 into 6 lakh, which means on a totality basis, in the month of April, you had a total of 115.209. I'm just doing this in rough. That is the total proceeds, out of which 0.0765 into 6, 0.0765 into 6 is 0.44455, which is attributable to 459, which is attributable to dividend equalization. Obviously, the other amount is attributable to other increase in net assets. Similarly, a similar working will have to be done for the month of May. So when we go to the month of May, we again start with the opening NAV, which is 18.75, but this time around we subtract the exit load. The exit load is again at the rate of 2%, which is 0.375, but this time around you subtract it, plus the dividend equalization per unit. Now you are at the end of May, which means 22.95 is the income when there were only 300 unit holders, plus in the month of May the income is 34.425, which is now attributable to all the 306 unit holders. Now there is some income in June as well, but the redemption is happening in the end of May, and hence June's income is not going to be considered here. So this will be, let us say for simplicity, 0.459, which we have calculated, plus 34 0.425 divided by 306. This is 0.1125 plus 0.459, which is I think 0.5715, which is the dividend equalization charge. Now this is to be added. So this is the redemption or repurchase price. Now if I had to do the similar working for June, then over and above what I've calculated here, I will also take the income of June and divide it by 303 units. But in this case, there is no additional units or repurchase happening in June, so we don't need to do this. So over here, minus 0.375 and 18.75, and this should be 18.9465. So we will just try to verify whether this working is correct. Redemption price will be so this is just a second, 22.95 divided by 300. Oh, that's 0.0765. I think I took the total value. This is 0.0765 plus 0.1125. That's 0.189. My bad. And hence you will have 0.189, which you add. So that's 18.75 minus 0.375 plus 0.189, which comes to 18.564. I ended up taking, erroneously, the total amount instead of the per unit amount. We are trying to find the workings per unit. And as a result, this will give you the redemption price. This is again to be paid to 3 lakh unit holders. So into 3 will be the cash outflow. So that's 556.692 is what you have to pay, out of which 0.189 into 3, that is 0.567, is paid towards dividend equalization. Now this will take care of the first two parts of the question, where you are asked the issue price as well as repurchase price. Your repurchase price was I think 18.564 and the purchase price was I guess 19.2015. Now the question is also asking you the income available for distribution. Remember, only the realized income is available for distribution. When you look at the realized income available for distribution, it will take the total of all of these three, 1, 2 and 3. However, this does not consider dividend equalization, so we'll have to consider that. So 22.95 plus 34.425, 22.95 plus 34.425 plus 45.45, and this total will come to 102.825 on a totality basis. So one could say that this is your income available for distribution. Portfolio appreciation is unrealized and hence it is not available for distribution. But apart from that, you have collected on a totality basis, I think 0.459 in the month of April, and remember we had discussed in the theory that even this amount is available for distribution. So this is plus 0.459. At the same time, you have paid some dividend, in the sense that you have paid, I guess, 0.567 to the redeeming unit holders, and hence from this you will subtract 0.567 in totality basis, and hence your income available for distribution will be plus 0.459 minus 0.567, and hence your income available is 102.717. So this is your answer for income available for distribution, 102.717, and hence we are left with the last part. The last part asks you to calculate the NAV as on 30th June. I'll just verify the income available whether it is correct or not. That's right, 102.717, out of which obviously 70% will be paid out as dividend. Now the question says you want to calculate the NAV as on 30th June, for which let us say you started the opening NAV on a per unit basis. This was 18.75 and you had 300 units, which means on a totality basis you had net assets which are worth 5625. These were the total net assets that you are worth. To this, new units were issued, and hence if new units were issued, you get some proceeds. So this is on new issue, you get some proceeds, and there is some redemption, so you will have to pay some of the proceeds. So it depends on how you calculate. On new issue, you are getting in total 19.2015, which includes dividend equalization. Now since this includes dividend equalization, we will not again consider it, but over here this includes, let us say, your dividend equalization value. So this is 6 into 19.2015, and hence this is 115.209 and additional minus redemption 3 into 18.564, which is equal to 500 just a second, this is 6 into 19.2015, which is 115.209, and 3 into 18.564, which is 55.692. This is the payment including dividend equalization, and hence you don't again subtract 0.567 as dividend equalization. So this should give you your final answer after considering new issue and redemption. However, during the period there is a portfolio appreciation that will increase your NAV. So your portfolio appreciation will be taken directly. So how much is the value of portfolio appreciation? I guess this is 425.47. So you will add this 425.47, and then comes a question on what will you add for the income available. So we can say that your incomes for the month of April plus May plus June, if you go to see, your incomes are 22.95, then 34.425 and 45.45. This is your incomes which are available for distribution. Apart from that, there is technically a dividend equalization for the month of April minus dividend equalization that you have paid for the month of May. Now I will not consider them again because I have taken 19.2015, in which case the dividend equalization has already been added, and I will not subtract because when I take 18.564, the dividend equalization has already been subtracted. However, this income increases my net worth, but I am distributing something. So how much am I distributing? My distribution is based on the income available, which was 102.717 somewhere over here that we have calculated, considering everything, 102.717 into 70%. So this is the distribution, 102.717 into 70%, which will be 71.9019. This is what you have distributed, and totaling, अगर आप income देखो, ये तीनों का अगर अपन total मारे, this is 102.825, 102.825 and 71 is distributed. This considers everything, and hence you will get the net assets considering all the values 5625 plus 115.209 minus 52.692 plus 425.47 plus 102.825 less 71.9019, which will come to approximately 6140.9029 plus or minus certain degree of rounding off, divided by units. On 30th June the units are 303, so you divide this by 303 units and you will get approximately 20.27, which will be the NAV as on 30th of June. We have tried to discuss this in covering all the concepts and in the best possible time. So this is 20.27. You can refer the theory. I've given some notes, some reference notes on why a particular thing is taken in a particular way. So you can refer that for your reference. But I think you get a gist of the concept, hopefully. So that's it for today. Thank you very much for your time, and I'll see you soon with some other concept. Please write in the comments box if you need me to cover a specific concept. If it is feasible, I'll definitely try to cover them. Please do write your suggestions, and I'll try to pick up certain specified concepts to the best extent possible. Okay? Thank you very much, and I'll see you soon. Bye-bye.